Bull Bear Buzz podcast for decoding markets, fueling minds.
Welcome to the Deep Dive. We're here to cut through the noise and bring you the core information from key sources.
Oops, straight to the point.
Today, we're really drilling down into HCL Technologies. We've got their latest financials, the audited results for the year ending March 2025, their global IFRS consolidated statements, and also some news on a key governance appointment.
That's right, the secretarial auditor.
Exactly. So our mission, really, for you listening, is to pull out what actually matters from all this paper for a giant company like HCL.
And quickly, we'll find some pretty interesting figures, I think, and get a real sense of their financial health and, how things are being overseen.
Sounds good. Let's jump right in then. Financial performance first. Year ending March 31st, 2025. What are the headline figures telling us?
Okay, so the top line, total revenue, hit 117,055 crore for the year.
Okay, and how does that compare?
Well, it was a pretty healthy climb from the previous year, which was 109,913 crore. So definitely showing growth there.
Right, growth is good, but revenue isn't everything. What about the bottom line, the profit?
Good question.
Oh.
Net profit also saw a nice increase, came in at 17,399 crore.
Up from
15,710 crore the year before. So yeah, the increased revenue seems to be dropping down to profit effectively.
And they give us the US dollar figures too, right? For that sort of global perspective.
They do in the consolidated IFRS statements. So in USD, the consolidated revenue for the year was $12,348 million.
Which was up from
$11,967 million previously. And similarly, the consolidated profit before tax in dollars that reached $2,735 million for 2025.
Compared to?
$2,531 million in 2024. So, whether you look at rupees or dollars, the trend is clearly positive momentum.
Well, okay. So revenue's up, profits up. What about the foundations, assets, equity? How does the balance sheet look?
Right. Looking at the consolidated USD balance sheet as of March 31st, 2025, total assets stood at $12,348 million.
Okay.
And total equity was $8,150 million.
And comparing that back.
If you look at the year before, assets were $11,967 million and equity was $8,186 million. So assets are up a bit.
Yeah.
Equity actually dipped slightly, but it's, broadly stable. Yeah. Suggests a solid footing overall.
Okay, solid footing. Now let's maybe dig just a little deeper. I noticed something, a pretty big jump in their other income expenses net in the USD figures. What's going on there?
Good spot. Yeah, that figure jumped quite a bit, $280 million in 2025 compared to $180 million the year before.
That's a $100 million jump.
It is. And a big chunk of that, $69 million specifically, came from a gain on divestment in subsidiaries.
Okay.
This relates to them selling their stake in that State Street International Holdings joint venture.
Right, so strategic moves making a direct financial impact.
Exactly. Divestments like that can give a nice, sometimes one-off boost to the income statement, often signals they're maybe refocusing the business a bit.
Interesting. What about costs? Anything stand out on the cost side? Finance costs, maybe?
Finance costs did tick up slightly. They went from $67 million in 2024 to $76 million in 2025.
Not huge, but noticeable.
Yeah, not dramatic, but it's something to keep an eye on, especially with interest rates doing what they're doing.
Yeah.
It reflects their borrowing costs, basically.
Okay. And for investors, earnings per share is always a key one. How did that look?
That showed improvement. The earnings per equity share, or EPS in USD, both basic and diluted, climbed to $1.75 for the year. Up from 70 cents the previous year. So that suggests, more profit being generated for each share out there. Generally a good sign for shareholders.
Speaking of shareholders, dividends are always a hot topic. Any news there?
Yes, actually. The board declared an interim dividend just recently, April 22nd, of 18 bps per share.
Okay.
Although it's interesting, the IFRS statement also mentions an interim dividend of 60 per share relating to contributions and distributions.
Okay. Different figures.
Yeah, it just shows how dividends can sometimes be accounted for or, described differently depending on the specific standard or context. The 18 is the latest board declaration.
Got it. Okay, let's shift gears a bit. HCL isn't just one monolithic thing, right? They have different business segments. Do these results break that down?
They do. The consolidated results, following the Indian accounting standard IND AS 108 on segments, they break it down into three main operating segments.
Which are?
IT and business services, engineering and R&D services, or ERD and HCL software.
Right.
Now, The specific numbers for each segment aren't in the sort of top-level summary we have here, but that detail is available in the full results for anyone wanting that deeper, more granular view of where the performance is coming from.
And it's worth remembering, these numbers aren't just plucked out of thin air. There's a whole layer of accounting policies, estimates, judgments made by management. Why is it important for us to, be aware of that?
Oh, absolutely fundamental, because it highlights the assumptions built into the numbers. The IFRS docs mention a few key areas, like revenue recognition.
How so?
Well, especially for those big fixed-price projects, they often use the percentage of completion method. Basically, they recognize the income bit by bit as the project progresses, rather than waiting till the very end. It requires estimation.
Okay. Makes sense. What else?
They also have to estimate how much they might not collect from customers, the allowance for uncollectible trade receivables.
Right. Bad debts, essentially.
Pretty much. And then there's valuing things. Fair value measurements. They talk about different levels, level 1, 2, 3, based on how observable the inputs are. Level 1 uses direct market prices. Level 3 uses more internal models and assumptions.
So more estimation involved further down the level?
Exactly.
Yeah.
Other big estimate areas include potentially writing down the value of goodwill and intangible assets,
right.
Things like brand value, and setting aside money for provisions and contingent liabilities, future potential costs, basically. Understanding this just gives you a sense of the, let's say, inherent complexities in reporting for a huge global company.
Yeah. Definitely not just simple arithmetic. We also saw some action on the M&A front, buying and selling bits of the business.
We did. That State Street divestment we mentioned, that closed April 1st, 2024, brought in $172 million.
Okay.
And on the buying side, they made two notable acquisitions during the year.
Which were?
Zinnia SaaS, that's a data catalog and governance company, acquired for about $26 million in September 24.
Relatively small one.
Yeah. And then a much bigger one. They bought assets related to the Communications Technology Group, CTG, from Hewlett-Packard Enterprise, HPE.
Ah, okay. How much was that?
That was $225 million. So you see them shedding one asset, picking up others, suggests some strategic reshaping going on, maybe focusing more on core IT, data governance, and comms tech.
Right. Let's switch lanes now to governance. This appointment of a new secretarial auditor, Ms. Smisano Makaran M. Joshi & Co. What exactly do they do, and why is this appointment significant?
Okay, so the secretarial auditor plays a really crucial role in corporate governance. Their job is basically to check independently that the company is following all the applicable laws, regulations, and procedural requirements. Think Companies Act, SEBI rules, FEMA, etc.
So a compliant watchdog, essentially.
In a way, yes, an independent one. The board approved this appointment on April 22nd for a 5-year term, starting from fiscal 26, but it still needs shareholder approval at the AGM.
And this firm, Makaran M. Joshi & Co., they're experienced.
Oh, yeah. They're described as a peer-reviewed firm, been around for over 25 years. They specialize in exactly this stuff: corporate law, SEBI regulations, foreign exchange rules under FEMA. They do various audits, so they know the terrain.
And this isn't just HCL deciding to do this, it's required, right?
Absolutely. It's mandated under Regulation 30 of the SEBI listing obligations and disclosure requirements, the LODR regulations. Listed companies have to appoint a secretarial auditor. It emphasizes that independent compliance oversight.
Okay, so we have internal processes, we have the secretarial auditor checking compliance. What about the main financial auditors, the ones signing off on the big numbers?
Right, the statutory auditors, that's BSR & Co., LLP, Chartered Accountants. They audited both the standalone and the consolidated financials we've been discussing.
And their verdict.
Their reports are included, and crucially, they give what's called reasonable assurance. Basically, they're saying that based on their audit, the financial results present a true and fair view of HCL's financial position and performance.
Which is the standard language you want to see.
Exactly. It provides that critical layer of confidence for investors and stakeholders in the numbers themselves.
Now, a global company like HCL must face a whole range of financial risks. Does the documentation touch on how they manage those?
It does. The IFRS statement outlines the main ones. You've got market risk. That's things like currency fluctuations, interest rate changes. Then credit risk, the risk of customers not paying up. And liquidity risk, not having enough cash on hand when needed.
Standard risks for a big business.
Pretty standard, yeah.
Yeah.
But they state they have a formal risk management policy to mitigate these. And they specifically mention using derivatives like forward contracts to hedge against foreign currency swings.
Okay, proactive management there. What about related party transactions? Transactions within the group or with key managers? Always an area of interest.
Yep. The documents acknowledge these happen transactions with subsidiaries, with key management personnel. The key statement, though, is that these are conducted on an arm's length basis. Meaning under similar terms as if they were dealing with a completely unrelated third party. It implies fairness, no special deals just because they're related.
Right.
They also mention significant interim dividends being paid to entities that have significant influence over the company, again, disclosed as required.
Okay. And finally, looking ahead, any specific commitments or potential liabilities flagged? Uncertainties on the horizon?
Yes, the IFRS docs mention capital commitments, planned future spending, essentially, and also contingent liabilities as of the year end.
Anything specific?
The main one highlighted is an ongoing legal issue with India's Department of Telecommunications, the DOT, concerning something called adjusted gross revenue, or AGR.
Ah, that AGR issue has affected quite a few companies.
It has. It represents a potential future financial liability for HCL, though the company knows they believe they have a strong legal case. But it's flagged as a contingency.
Okay, so let's try and wrap this up. Pulling it all together from these HCL documents, what's the overall picture?
Well, I think the main takeaway is clear financial growth in the last fiscal year, revenue up, profit up. We also see strategic activities selling off the State Street stake, buying the Zennia and HPE assets. So they're actively shaping their business portfolio.
And on the governance side?
They're ticking the regulatory boxes, like with the appointment of the new secretarial auditor. Seems like compliance is being addressed formally.
But it's also important, isn't it, to remember what you said about the estimates and judgments involved in these numbers?
Absolutely crucial. These statements, while detailed, are built on assumptions. And, like any huge global operation, HCL faces ongoing financial risks, currency, credit, liquidity that they need to constantly manage.
Right. Which leads me to a final thought, really, for you listening. When you consider HCL's massive global presence, operating across so many countries, dealing with all these complex accounting rules and regulations, how truly vital are transparency and that kind of diligent oversight we've discussed in keeping investors confident and making sure the company can keep growing sustainably?
It's definitely the core question, isn't it? Highlights why digging into these details matters.
Just a reminder before we finish, the information provided in this deep dive is for educational purposes only and not financial advice. We are not SEBI-registered advisors. Investing in stocks carries risks, including potential loss. Consult a SEBI-registered advisor before deciding. We are not liable for any losses from decisions based on this information. And for unbiased market updates, please subscribe to Bull Bear Buzz channel.